Hi, good afternoon, everyone. We're lucky enough to have the post-lunch panel, so I'm sure people will stream in as they get full. I think this is a very exciting one, right? I'm informally calling this the Future of Fintech panel because it sounds very exciting. But I'll introduce myself, and then I'll actually let the panelists introduce themselves. I think everyone has a good story to tell about themselves that I won't be able to do justice to. I'll just have all of you kind of give a 1 minute, but really a 1 minute background on who you are, what organization you represent. But I'll just kick us off. So my name is Stephen Dang. I'm one of the general partners at DFS Lab, and we are a early stage digital commerce venture capital firm that's focused on Africa. We've done more than 30 deals over the last 3 to 4 years, and we started out actually as a fintech only investor. And now we've broadened our sights to what we call digital commerce, which is what I describe as from the first mile to the last. And so we do everything now from supply chain to social commerce. But as in many things in the African venture capital ecosystem, it almost always comes back to fintech. So I'm very excited to have the esteemed panelists we have on this panel. So without further ado, I'll turn it over first to Lola, and then we can go down the line.
Great, thanks, Stephen. I'm Lola Agabalogan. I am product lead at Paystack, which is a financial infrastructure business in Nigeria. I'm based in London and have been working at Paystack for about the last 18 months. Really excited to discuss sort of the themes of fintech in Africa today and where we see it going. And I'll hand it over to Changsi.
Thanks. Hi, everyone. I'm Changsi. I work for Flutterwave. We are a payments infrastructure company based out of Lagos, Nigeria, and also San Francisco, California. We process payments for the Ubers, Netflix of the world, and we also serve fintechs, SMBs. We also have a consumer wallet, consumer ecosystem, and our Send product, which is our remittance product. I manage strategic investments at M&A at Flutterwave. Really glad to be here.
Thank you. All right, hello. My name is Obi Emetaram. I'm co-founder and CEO of Zone. Basically, Zone connects balances held with fintechs and banks together to allow value flow across seamlessly, irrespective of the platform or the country or the currency. But we do this on blockchain in a decentralized way. So all of those balances or those entities can connect directly without an intermediary. Where we see ourselves as the rails, so we don't have customer-facing solutions. Our clients are financial services providers like banks, fintechs, MFIs, and so on, and we expect they can leverage our infrastructure to create customer-facing solutions for their own clients. Yeah, basically, that's me.
Okay. Hello, everyone. I'm Walid Hassouna. I work for Value. Value is all things money in Egypt. So we started in Egypt. Hopefully this year we're going to be in Saudi and Jordan too. We started at the buy now, pay later, and then we transformed into consumer finance and cash loans. We do B2B and B2C financing. We do gift cards. We do cash loans. And we also own an HR platform. We are like 1 week away from issuing our Visa card to include this as in our customer wallet. We have 1 million plus customers in Egypt, and we have 20% market share in Egypt.
Hello, everyone. My name is Henry Mascot. I'm a co-founder and CEO of Curacao. At Curacao, we're building what we like to call the modern insurance infrastructure. Basically, what that is digitizing the whole insurance value chain. We currently have 2 products. One is our embedded insurance platform, where we're enabling banks, fintechs, logistic tech companies to add insurance to their product. Our second product is sort of like our claims and fraud detection tool, where we're enabling insurance companies do fraud detection using AI. We're currently in 8 markets. Nigeria is our main market. We're in Ghana, Nigeria, Kenya, Uganda, Tanzania, etc. Yeah, we work with some of the biggest insurance companies on the continent: AXA, Old Mutual, Liberty. And on the embedded insurance side, we're currently powering 100 businesses, including like some of the Nigerian banks, fintechs, to embed insurance in their product. Happy to be here.
So we have an all-star panel covering multiple geographies, different products. but this is about the future of fintech. So one thing I think about is talking about what's going to happen next is to think a little bit about what has happened so far, right, and what's happening today. And one thing we do know is that most of the venture capital on the continent has traditionally gone to fintech, and those companies that have done well within the sector have done really well. However, this last year, according to the Partech, shout out to the Partech team, but the Partech Africa report, was the first year that fintech actually had a decrease year on year, and it was significant. It was about 40%. And so my first question that I want to ask our panelists is, what does this mean, right? So this is the first year we've seen a decrease in the actual funding. Is it really that fintech is slowing down, or are we seeing an inflection point in evolution of the sector? And so I'll just turn it open to kind of open answers for now, but I'll call on people if we get shy here. Go ahead.
Okay, so I'll just jump in from the angle of the opportunity, the market, right? So I think what we're seeing is an evolution more of, and you can see that simply when you look at the market for the different sort of fintech segments and the opportunity that still exists. It's still hugely untapped. So if you think about payments, for example, what's the percentage of payments that are digital? What percentage are cash? If you look at financial inclusion, what percentage of the population is still excluded? If you look at insurance, for example, what percentage of population have access to insurance? Lending, the population that has access to lending compared to the rest of the world is still very low. So the way we think about it is that potential is still huge. What we're seeing is more of a correction for the hype. There was a huge hype about growth prospects and, issues around. Some issues were not factored, like the local currencies, volatility around the local currencies and devaluation and all those things. So I think it's more of correction for that, of course, with the macro impact. But there's still huge opportunity out there, and I expect that once we get past this correction phase, we should see investments flowing into tap into that opportunity.
Yeah, I think building on top of that, I definitely agree with that. I think there's so much more to build of that potential, right? So laying out the infrastructure, continuing to build deeper and wider infrastructure, embedding payments within the customer journey, building beautiful products on top of it on the consumer ecosystem and the merchant ecosystem, and then connecting the African continent and Africa to the world. Part of that vision that I think all of us have. I think the opportunity there is just, we're only accelerating, I think. I think obviously there's been an outpouring of investments. Valuations have gone up. And this next phase will probably, be more focused on a lot of the, the fundamentals, the business model, the economics, path to profitability, all of that. But a lot of opportunities to continue to build. A lot of opportunities, I think, in B2B and building out that infrastructure, partnering with the right companies from the back end to the front end to the consumer merchant ecosystems. And then on top of that, I just think it's a really great opportunity for partnerships, for collaboration among all of us in the ecosystem.
So if I chime in, again, I think that with the 41% or the 40% drop we see, I think is also very, very linked to the global, environment right now. So in Q1, I think global venture capital dropped by 41% compared to the year before. Actually, it's actually less, or it's actually more if you take out OpenAI and I think one other company that raised billions of dollars in funding. Yeah, and obviously, if you see what's happening in the States, 75% of the funding that comes into Africa is not from Africa, right? It's from the US, it's from, and so, with the interest rates having gone up, investors just prefer to leave their money in the bank, right? And it's so I think that's where it's coming from. I think it's probably less of fintech investments dropping in Africa and just reflective of what's going on in the whole global ecosystem. The opportunity is huge, so I doubt that investors are just taking their money out, just where the market is.
Yeah.
So yeah, I think from a different angle, talking about Egypt, for example, we have seen major changes happening in the market in the past 5 years. So in 2017, when we started, everyone in fintech was actually in payments. So at this time, we only had 2 payment companies, and the 2 has raised enough funding to grow very well. And then we started talking to customers for the first time. So we started seeing fintech like us and other players, of course, that are focused on lending for the first time in Egypt. And then there was different models like buy now, pay later, consumer finance, and everything. And and there was an angle for fintech for everything. So even in logistics, even in B2B, everything, there was an angle for fintech. And this where the money actually was thrown to those companies. Unfortunately, out of those companies couldn't continue the process because everyone was really worried about only growth. So when we sit with VCs, everything that they wanted to see how far we're growing month over month, week over week, and day over day. The change that we have seen in the past year and a half, 2 years, because we did our first fundraising outside EFGRMS, which was our incubator for a long period of time, was actually from family offices and strategic investors. We have seen a lot of changes happening currently in Egypt. So we see less VC funding, and we see more PE funding. So the companies that are capable and are growing at scale without compromising on unit economics, and they are in the green when it comes to their P&L, we have seen a lot of PEs coming in. And recently, Forbes Middle East had 30 companies in the Middle East that are fintech top 30 companies. 8 of them were Egyptian. Most of those companies are profitable, and PEs are mostly considering or have already put money into those companies. This is a major change from a VC life to a PE life.
I think it's an excellent point. Yeah, we've certainly seen the rise of debt financing as well, in addition to equity. And I like your point about products beyond payments that are starting to proliferate. So that's one of the aspects of breadth that's increasing, right? So more products are alongside payments. But I want to get a little into depth. So in terms of where I cut my teeth on all this, I used to be at the Gates Foundation, where we did a lot of work trying to understand how deep fintech actually went within a certain income or income segments. So my next question is going to be a hard one, but I'll have Lola start because I know she can handle it. We talk a lot about financial inclusion. At this conference in the last 10 years, how deep has fintech really gotten within your respective markets when it comes to customers outside of the top income segments? And when you think about the growth of fintech in the future, how big is financial inclusion as a story going forward?
Yeah, it's a really good question. I mean, if we think about M-Pesa in Kenya sort of being the original like fintech in enabling large-scale peer-to-peer payments, that is what I would consider last mile. So can I just go pay for something on the street and use my phone to pay the person that I'm buying, you know, a bottle of water from? And when I think about some of the businesses that our organizations are running, that's sort of at the other end of the spectrum, which is more large-scale B2B fintech enablement and payments enablement in some cases, or lending. So I think that it's kind of a question of like, what segment are you focusing on when you're trying to build, let's say, a venture-scaled fintech organization? Are you focusing on that sort of P2P use case, or are you focusing on the larger scale end of the spectrum B2B enablement through infrastructure? Those are two very different sort of product sets and almost like company cultures and philosophies that you might need to run those run those types of businesses successfully. So I think that we're seeing more players expand beyond just that initial use case into the adjacent ones. But I do think that we're still at the earliest stages of really getting to, let's say, full financial inclusion powered by some of the organizations that are sort of venture scale.
Yeah, no, I definitely agree, like Paystack. For us, yeah, financial inclusion, the power of financial inclusion just being that transformational tool, we really believe in that, you know, that long-term vision. That's something that, you know, we care a lot about over the past decade, how much it's kind of started to penetrate and really kind of at its core provided financial essential services to families and communities, and we continue to kind of broaden that vision, right? So some specific examples, as you were saying, mobile money platforms, digital wallets, that's something that's kind of a big part of Flutterwave's business that we care a lot about, and we'll continue to develop and grow and help on that. Other businesses, kind of if we look at the offline space, POS, agency network, cash in, cash out, businesses that are digitizing traditionally very manual processes. These are a lot of these businesses out there that are doing really innovative things, and Flutterwave, we love to be a part of that. We power the payments back end of it, and how do we contribute our part of that ecosystem? And then I think one thing I'd really love to mention is also, at Flutterwave, part of it is also, helping individuals and small businesses just to get online and transact in the first place, right? So no matter where you are, if you're an individual in not a city center or not however geography, being able to tap into that global customer base and being able to, sell whatever you want online, and we help you do that. We help you, set up a website, be able to transact and get paid. I think listening to some of those stories, that's really powerful too. And that's kind of part of our vision of simplifying payments and kind of tapping into that community, tapping into that potential of financial inclusion.
Yeah. Go ahead.
Yeah, just to chip in and segue from her. Some analysis we've done, the way financial inclusion evolved with mobile money in Kenya, the initial use case was transferring, the need to transfer money, right? And then every other thing evolved. What we're seeing in Nigeria is the opportunity to really scale financial inclusion more tied to the SMEs, enabling the sort of informal SMEs, informal, small, really micro, small businesses. And that's because in countries like Nigeria, where we're heavily consumptive, like we consume, right? You have a lot of informal trade and distribution going on. So like in those informal sectors, almost everybody is a trader. Now, once those sort of the businesses, but essentially individual run, once they're enabled to accept payments, get access to loans, the fact that they now join the sort of formal financial system and they have their monies within the system encourages things like payments. So they can now pay from those balances. They can now have access to lines of credit to do payments and so on. Companies, startups that are customer-facing startups that are targeting that segment, massive segment, in conjunction with things like cash in, cash out agent, services, are seeing major traction. So we really think that there is a huge opportunity to sort of scale financial inclusion through this access, like targeting banking, this informal MSME segment. Yeah.
Again, obviously, from my perspective, the biggest issue with financial inclusion is distribution, right? Is the cost of reaching those customers, and so it's the same problem in insurance. So in the continent, penetration is at like 2-point-something%. Is a comparison with a GDP. So this is like maybe 30% of the global average. And again, when you sort of like look at like maybe let's take Nigeria, like health insurance penetration is like maybe 6%. So what that means is that was a population, right? 6% of the 200 million have access to health insurance. And then obviously if you ask why, and obviously because we're talking about financial inclusion, how do you include more people? And the reason, very similar to what Obi said, is because most of the people are, in the informal sector, right? People who have health insurance currently are people who work for the formal sector. So your employer gives you health insurance. And so if you don't work in the formal sector, you don't have any health insurance. And then for the insurance companies, it's very difficult to reach the consumers or the retail segment because it's expensive, because how do you reach them? which is obviously where technology becomes exciting, because now people have mobile phones, you can try to reach them on mobile phones, and then obviously you ask who has distribution. So the telcos, the banks, and then obviously you start looking at interesting models like embedded insurance and so on and so forth. So yeah, that's sort of like our perspective. We see what the challenges are in terms of including more people, and obviously we see the opportunity in leveraging technology and embedded insurance to like reach more people.
Do you want to go? Go ahead.
I think we have a great case study in Egypt again on financial inclusion. So there is, of course, a political will for financial inclusion for various purposes, but in reality, customers are not going to get financially included unless they get a benefit or a perk. And when we started, we wanted to play it safe. We wanted to provide the first instant approval for credit limits in Egypt. So when we started only with the banking sector, with the bank sector. And of course, you can imagine competing with 35 banks with very deep pockets is impossible. So the only way for you is to go to the unbanked sector and try to balance this together. So currently, we approve 50% of our customers on daily basis are totally unbanked. They never banked with a customer before. And accordingly, we are able to generate profits because we're not competing on the same pie that the banks are focusing on. So financial inclusion in Africa is extremely important, because if you don't have the angle, then there is no room for you to grow, because you will have to compete with well-established big regional banks. And you have to have also another thing which is very important, a product that speaks to those kind of people, that they really need to get a product with certain services, with certain features. It's very important for them to have the access. So access to finance, access to payments, access to insurance is extremely important. On the other hand, we started supporting the freelancers as much as we can. So we built a lot of platforms and helped in building a lot of platforms where we can reach out to freelancers, allow them to get financing, allow them to sell their products using financial solutions through payment companies. Of course, all of this was closed loop. So I see a big leap in financial inclusion, and not only because of social responsibility, but more because this provides a more sustainable long-term product and reduces the cost of operation for anyone who's able to figure out and crack this segment, which is the most important segment currently in Africa.
Yeah, thank you. And a couple of themes I keep hearing is the importance of the informal market, the importance of durability and time, and figuring out what people actually need. And I do think that fintech has been a segment, because it's been so successful, that there has been a lot of hype around it. And at DFS Lab, we talk a lot about how the market doesn't care about your hype. Eventually, it will correct you, and I think we're going through one of those cycles right now. And so maybe I'll phrase it another way so none of the panelists get in trouble, but if you had to start another company today, right, what would you not start in terms of either a product type or a segment? What do you think maybe has gone through too much of a hype cycle and isn't yet brought back down to earth? And we'll see who's brave.
I'll jump in.
Brave, okay. Go ahead, Waleed.
I'll jump in, yeah. I think one of the most important things is cash burn. You have to manage your cash burn, because what really happened that because everyone was raising like enormous amounts of money, everyone was burning cash to the extent that customers are not willing to buy any product or jump into your service unless it's deeply discounted and your unit economics are negative. So one thing that we learned the hard way, that for the same amount of money that we could have burned, we could have reached a higher sales figure. So this is very, very important, because at a certain point in time, you want to make sure your product is successful. So you're pushing as much as you can, but if you pushed less, you would get the same results, maybe in a little bit shorter tenor, and will defend the market from being super discounted. This is one thing that we have learned. Second thing is you should not try to copy products from other markets and try to implement them with the same techniques. You have to understand totally how the local market is going to react to this. And this was one reason we converted from buy now, pay later very fast into consumer finance with longer tenors, because merchants are not able to pay those kickback and those rebates, those high rebates for good. So the question would be, adding more people into buy now, pay later will increase competition, and then your only source of revenue is going to go down. So when you try to localize a product, when you try to copy a product or try to look at different products, you should have your own local product and work with it very well. The third thing is do not have a lot of technical debt. So usually what everyone was doing, and at the time that you have problems on technology level, but you don't want to solve them because you want to grow. So you're growing, and then you're trying to solve for that. The problem is, as you grow, it becomes very expensive to solve those issues. So it's very important not to have a lot of technical debt. So slowly but surely is the new thing, I think, across the globe right now. Everyone is really focused on making the right decisions, rational decisions, and also making sure that what they are selling, this product will always sell, even if it's not deeply discounted.
I have one that not necessarily answering your question directly, but something that I would consider in future iterations. So just being extremely thoughtful about partnerships. One thing that I have learned in my time with Paystack is that to some extent, product development in fintech is almost 75% partnerships and regulation and actually 25% technical development. And so when you think about what partners you're going to engage with to execute on your product, there's just a lot of intentionality to consider, how that partner may be very good right now, but may change in shape at some point in the future in a way that sort of burns you, or a partner that might actually end up slowing you down as you're trying to, iterate and ship quickly because of their own internal constraints and challenges that they deal with. So I think in fintech, trying to do everything on your own is also not the right answer, because you would just, never move forward when you think about all of the sort of licensing compliance requirements that can come into play. But being extremely sort of strategic and thoughtful in how you select your partners and at what parts of your stack you decide to partner or sort of outsource versus build in-house feels like a really important consideration.
Great, last one.
I'd 100% echo that. I definitely agree with that. Partnerships is everything. How can we work together? No fintech can succeed and build a platform in silos, right? So just finding ways that we can work together among fintechs, among other people in this ecosystem. How can we work together with banks, regulators, other people, just among each other? How do we build together?
Thank you. I felt like those are all very answers that kind of skirted the question, but they were good. So this last one I'm going to ask all of you, so you have some time to think about, which is, I think a lot of people think that venture operates on almost an endless cycle, but in reality, these are 10-year cycles where you have to return a fund. But diving even deeper to that, you really have to show traction in 5 years, right? So it's not like we have endless time to figure this out and start the next cycle. So the question I want to ask each of the panelists is, what are you most excited about? But to answer it in two ways. So one is, what are you most excited about in the next 2 years, as we might still be in similar macroeconomic conditions, et cetera? And then if you look really further out in the next 10 years, right, what are you really, really excited about in terms of a long-term vision? And so we'll start with Lola, and then we'll go down the line, but go ahead.
Yeah, I think in the next 2 years, I'm probably very excited about seeing just sort of aggregation of all of the different ways that one can collect money from customers in the market. So from Paystack's perspective, we are building financial infrastructure that allows merchants and businesses to collect funds from whoever wants to buy their services or products. And at the end of the day, in order for our merchants to have, let's say, the biggest slice of the pie, we need to be able to offer as many different types of payment rails as possible to our merchants. And it's also very important for us to offer highly reliable, highly optimized payment rails that sort of account for things like fraud, make sure that we can deal with things like chargebacks and disputes, and sort of just have a really world-class financial infrastructure plugin that any of our merchants can easily use. So I think that building infrastructure is like an ongoing process because there will always be more and more things to aggregate as things innovate. And then from a partnerships angle, there's always going to be continued partnership work to optimize on the actual performance of those payment methods. So I think that for merchants today, as they're trying to grow their businesses in a constrained environment, that's extremely important that you're getting, 90%, 95% success rates and not 75% success rates, because that's actually a very big difference when you think about what your revenue will look like over the course of 2 years if consumer spending is down. So I think that's actually something that we're quite focused on in the short term. And then if I think about the 10-year vision, what I feel that we need to move towards is more borderless commerce on the continent and in and out of the continent. And if I had a magic wand, I'd do away with all of the Forex challenges that we experience in markets like Nigeria with remittances. But I do think that we are still at the very beginning of unlocking the cross-border problem within the continent and for the continent outside of the continent going in. So I think that is something that we are extremely focused on at Paystack, ensuring that we're building the foundations for long-term borderless commerce on the continent. So yeah, that would be my answer there.
Chauncey?
Yeah, I'm also really excited about, us working together and how to deepen that infrastructure and deepen that ecosystem, right? So there's a lot more that we can do across the markets and around the world, on the infrastructure side, deepen the different increased payment methods, deepen the infrastructure layer of that. And then building on top of that, how do you deepen the ecosystems around your consumer base, around your merchant base, and build beautiful products on top of that. So in the next 2 years, I'm really excited about, fintechs coming together and, fintechs of scale playing a more critical role in the financial services broadly. I think we can together build some really great solutions out there for the consumers out there. And at Flutterwave, there's just so many more communities to serve. There's so many more markets that we can make an impact. We recently acquired a PSP license in Egypt. We're really excited about Egypt, North Africa, rest of Africa, global markets. So I think there's just so many different markets that we're really excited about. I think in the longer term, just coming back to, I guess, the question on financial inclusion, just the power of fintech broadly in, touching the lives and outcomes of people globally. I think there's just so much potential there that I'm excited about. I think as we continue simultaneously lay out that infrastructure, the past couple of years, like the word that got used the most, right, was leapfrog. As we continue to leapfrog and think through laying out that infrastructure, and then also layer on top of that accelerating advances in AI, more developer tools as more people, deeper talent pools coming in and helping in that ecosystem, continuing to build out fintech in Africa. I think there's just a lot of potential on what the impact can be around the continent and globally. So really exciting opportunities there.
All right, yeah, so I'd say in the next 2 years, I'm excited about the rails for payments. A lot of investments have gone into customer-facing solutions. Like companies like Paystack, Flutterwave have scaled significantly, servicing merchants, and a lot more that way. Not as much investment has gone into the rails, which is essentially connecting the stores of value and enabling interoperability. In countries like Nigeria, you have some level of interoperability that has been achieved, but very unreliable. We saw some of the issues that we experienced in the country in the past few months with load and scale of payments. In other African countries, you don't have any interoperability at all. What you have is mobile money operators who are more siloed, where the sender and the receiver have to have accounts in the same institution. So what we're building in Zone and what we think we're really excited about is a lot of investment in terms of intellectual, in terms of funding, in enabling those rails, those interoperable rails that other customer-facing payment companies can leverage to build really reliable and frictionless payment solutions. We're doing that on blockchain, which is for us the next generation tech stack to solve this problem. In the long term, 10 years, I think a little more radically, right? And we see a strong role for DeFi, decentralized finance. And I know for some people it sounds like a lot of buzz stuff, but the big thing is custody of money, right? We all are aware of what happened with SVB and all of that. And the whole idea with DeFi is that the funds are not held by any entity, right? They are stored on the blockchain, so they are secure. There's no counterparty risk. You know, it's all self-custody. That is a big thing. The second thing about it is that today, financial services, particularly lending and investment and so on, are restricted to entities that can keep custody of funds. Once you remove the need for custody, right, and all the capital requirements that go with keeping custody, then you open the floodgates for innovation around the types of financial products that can be built on the blockchain. So when you think long term, and when you consider the migration now gradually away from the less compliant crypto assets to more regulated and accepted digital currencies like CBDCs, like the interplay between these regulated CBDCs that we're seeing plus DeFi will create a whole new radical landscape and open up opportunities for financial inclusion and for just transforming the financial landscape. Yeah.
Thank you.
So, let me try to tell you what I think about in the next 2 years from a founder perspective. So everything that we've talked about is more about product perspective or infrastructure. So I think the coming 2 years are going to see a lot of consolidation happening in the fintech. So my assumption is we're going to have 50% or even more less number of fintech that are active. Most of the fintech are going to be acquired or merged into other entities that are bigger and that can serve more touch points with the customer. So my assumption in the coming few years, we're going to see consolidation, mergers. Definitely this is going to happen either through major strategic players or even banks. In Egypt, we started seeing a lot of banks investing in fintech, acquiring fintech for the first time in the past couple of years. We've never seen this before. On the other hand, in the next 10 years, on the longer, I think we're going to enter a market that is totally deregulated. So what's happening right now is regulations are not able to keep pace with the changes, and they need to push the pace so that they can achieve other goals like financial inclusion or support the economy or even attract foreign direct investment to markets in Africa specifically. So I think we're going to go into a more deregulated market. I think you're right. At a point in time, there will be no need for currencies. There will be no need for central banks to manage this. Everything is going to be stored somewhere with no counterparty risk. So accordingly, I think we're looking at a fully deregulated market when it comes to financial products in the coming 10 years. This is my assumption. Maybe it takes a little bit longer, but I believe, and I still believe, that regulations are going to become very minimal, and everything is going to get deregulated, and actually cross-border transactions and everything like that is going to grow very fast.
Yeah, we should definitely talk about that after, because I assume you get more regulated over time. But okay, cool. So yeah, so for me, right, in the next, I'm the insurance guy, so of course I'll talk about insurance. So in the next 2 years, things that are already happening. Obviously, very excited about embedded insurance. So we're going to see that take off more. You know, the businesses like ours that are starting to provide the infrastructure that enables any business to, you know, embed an insurance product across multiple markets. So I'm very excited about that because that provides, again, we've talked a lot about partnership that allows insurance companies to partner with people who already have distribution. So that's already happening. So that's in the next 2 years, that'll get more mainstream. Something else that's also already happening, again, that we also play in the same spaces, obviously doing fraud detection using AI. Obviously, like generative AI is like totally taking off, right? So in the next 2 years, there are rumors of AGI. So maybe it will happen, maybe it will not. But in the next 2 years, we're very excited about like the prospects of AI and insurance. And the reason this is very important is like one of the biggest issues in insurance currently is claims, right? So because when you buy insurance, you're buying a promise to claim something. And because of fraud, the insurance companies don't pay out claims or they pay slowly. And so if you can automate the process of paying out claims, then you can have the best user experience and people trust. You can have a massive increase in trust. And then, so it's already happening. So we expect that to accelerate more. 10 years, again, 10 years is a long time. The world will be very different. Maybe we'll be in Mars in 10 years, but yeah, personalized insurance. So right now in the continent, insurance is very generic. In Nigeria, for instance, one of my fintech founder friends was like, you pay the same amount for your car insurance this year, the same next year they ask you for the same amount, following year the same amount. There's no inclusion of data to figure out, okay, did you claim? Like did your risk profile go up? Did it come down? So we're going to see like a lot more personalized insurance products based on data. Because of the emergence of fintech, there'll be a lot of consumer data that you can now mine to figure out how to protect people and how to value their risks. And then if I go all the way to blockchain with my brother, will be and there are definitely very strong applications of blockchain in insurance as well, especially around smart contracts. Again, back to claims. Because of how long it takes to pay a claim, in the next 10 years, we very, very clearly see opportunities where insurance companies are basically smart contracts or operate with smart contracts, where when you buy a policy, you don't need a human being to adjudicate the claim. When you make them, as far as the rules, you put in the claim, you put in the credentials, the smart contract adjudicates that, and then you get paid instantly. So this are all going to be possible. That's what I'm excited about.
Thank you. Wow. Well, a broad range of opinions. I like that. And it's always hard to answer because you're almost always wrong when asked about what's going to happen in 10 years. But thank you for the attempt. And I'm sure we'll have a lot more discussion about that. I think we have a few minutes for Q&A. Yes, we do. But first, can we have an applause for our wonderful panelists? Thank you. Thank you all for joining the panel. So we'll open it up to the floor for questions. Go ahead.
So, yes. So again, I said on the panel that you don't invest in financial inclusion. Yeah, there is no one who's going to invest in financial inclusion. But in the absence of you being able to financially include your customers, you're competing with the same pie with everyone else. So convincing investors is very easy if you have the right product, because they understand that this segment is not targeted by anyone. And if you can find the right product with the right unit economics and sell it to the customer, then investors will be interested, because you are opening a different pie completely in this market. So again, it's a public goal, it's inefficient, it will not work, but it will work only if private sector takes it in its own hand and start doing this. For example, in Egypt, we have 28 to 30 million wallets. 70% of them is only with one operator, which is Vodafone, and then the other 30% are with 36 banks. So this is, and the reason they have this, because they make money out of it, not because they want to do financial inclusion. So we just need to empower private sector with the right use cases and enable them to attract those customers, help them with the regulation. But investors are convinced if you have the right product. So you don't worry about it.
Maybe the lady in the blue?
Thank you very much for the name. One thing I haven't heard from the panelists is the power of research, especially on the continent. The continent is uniquely positioned with different people speaking different languages, with different culture, and this impacts financial inclusion. It impacts the advent of fintech over the next 10 years. I have not heard anything about research. And to some extent, the continent is unique, very unique. And so I think more attention should be placed towards research as well, in a way that better suits the fintech companies in different spaces to be able to collaborate. Because the power of data, the power of research, the power of BI is very important for the next 10 years. So I've heard about that, but the research part of it, I haven't heard so much as to investment in that and as to opportunities that that brings to the continent.
Yeah, there you go.
All right, I might take this one just selfishly, given that we are primarily a research plus investor, so I think it goes to the core of the question. I do think that there hasn't been enough research for both the investors and the founders, frankly. And so we as a firm will do things like primary research, where we spend our own money and go out and sample how deep does B2B marketplaces actually go in the streets of Lagos or Abuja or the periphery areas, right? And I think part of it is you cannot have strong conviction without evidence. You can have some conviction, and that's where hype cycles frankly come from, but you can't have strong conviction that actually has results without the type of research that I think you're describing. And so we build ourselves as a research institution plus an investment institution because of that, and I think it's one of the ways we differentiate.
I think you answered it perfectly well, but to be honest, again, I don't think we build. I think that's the beautiful thing about lean startup, right? It's like, it's like, you need to have customer validation before you scale, yeah. So it's the concept of product market fit. So, so it's inherently built into our, how we build startups. Like you need to put out an MVP out there, and then, based on customer validation. Yes, it's not, it's not maybe focused on like here, but it is how it works. So if you get validation that it works, then you go raise more money and you scale. So I would say it's inherently like.
Yeah. Hey guys, I'm from UCAN. We're an e-commerce platform in Morocco. We're part of the inclusion. We're enabling Africa from the grassroots and enabling everybody to build their stores and their businesses online. So we appreciate what you offer because we can be integrated to all of you, most of you at least, in the short term, with Flutterwave, Paystack, and Value. But the question is, I see that the innovation in fintech is kind of, in Africa, is kind of sporadic. It's not clustered in one geographic area. It was pioneered in Kenya, then you have Paystack and Flutterwave in Nigeria. In your opinion, what are the defining factors that are crucial to the penetration success of innovation in fintech? Because quite frankly, I'm a little bit jealous because we're kind of behind in Morocco. So what makes us lag in here? And I'm sure you probably tapped into our region and to see if it's possible to work. What can we change, and what are the defining factors, and what can we change to improve that penetration? Thank you.
Let me just speak from a payment angle, because I know that Nigeria is one of the countries quite ahead in terms of payments with companies like Paystack, Flutterwave. And we've analyzed it, and it seems like the initial investment in the sort of payment infrastructure, the first generation of payment infrastructure, which was done by the visionary guys, you know, in Nigeria, the likes of InterSwitch, and if you know InterSwitch and some of the rest of them, in the early days, really spurred and stimulated a lot of what we see today in Nigeria. I sort of, because I was in the industry around when the whole, some of the initial payment infrastructure was being laid. And sometimes we think about it and try to imagine a world where that work wasn't done then. And when I say then, this is 2002, actually. So that's 20 years ago. At the time, there wasn't even a term called Fintech. Like, there was no term like that. That evolved much later. So I feel like when we look around the continent, where that investment in that sort of baseline infrastructure was not done, you don't have that that progress, at least on the especially on the payment side, and that also unlocks other opportunities in other segments. But it's that initial work that needs to be sort of done with the initial investment, with the initial enterprise and entrepreneurial drive to sort of set up that base, and then other companies like ours can build on top of it. That's what the analysis is, particularly on the payment side.
I'll add one thing to that. I think after you have that infrastructure built, I think you still need to be solving a problem that's important enough and painful enough for consumers to then change their behavior. And I think that there's been examples of the infrastructure being in place, but the inflection point of adoption not happening until there was a moment where it was so critical for people to have this, you know, new innovation that they did change their behavior. Even in the last couple of months in Nigeria, I think we've seen so many more people adopting different payment methods since there was a cash crisis. In the US during COVID, Apple Pay, which I'm sure everyone here now uses all the time, 2019, like, really wasn't a thing, but over the course of those 2 years, because we could no longer, you know, use cash or didn't want to touch a machine, that became ubiquitous. So I think there's also a factor of the consumer behavior that is really important there too.
Yeah. My name is Edward Nwakati, and I'm the founder and CEO of Red Swan CRE. We're a full-service tokenization platform for commercial real estate assets. And my really question to you is that fintech and the payments that you guys are processing is very important to the economies of Africa, and meaning that you're moving billions of dollars of payments. But I'm just looking at financial literacy and wondering how you're kind of look at the full financial services that go along with payments, so that people who are just making payments back and forth are also looking at ways to invest their money and hedge against inflation. What are your thoughts about that?
Again, we're all capitalists, right? So, so I guess the simple answer is really that there has to be, just like the gentleman asked and value answered, really, is that there has to be an investment case to make that happen. Obviously, we're not a consumer business, so I'm not really the best person to answer this question. But I think really to be able to get people to be more literate. Again, it's sort of like the whole point of the financial inclusion conversation. You need more people to figure out what insurance is and the value for it. And so for us, is all inherent to sort of like the business model. It has to make sense for your business for you to sort of like invest in that. For us, we're infrastructure. And so when we're enabling businesses to sort of like embed insurance, we also have to provide modules that help them figure out how to educate their consumers. So for instance, for banks that are leveraging our infrastructure to embed insurance, we have to figure out an easy way to describe the insurance products so that when you see it, you understand. And then the marketing materials is sent to those consumers so that when they get it, like, it makes sense. But for us, we're doing that because that drives our business. So I'd say that the financial literacy thing is sort of like something you need to do to grow your business.
Okay. Oh, do you have
and I'll just add
20
that,
seconds?
Yeah, and I'll just add that it's a core part of everyone's vision, right, to get there. And I think as we continue to kind of work together and build partnerships and kind of bring platforms to scale, you get deeper platforms, you get better economics, and then you drive, the economics of scale. And when we build bigger platforms, I think we're able to serve more communities, more markets, and hopefully serve more of the vision that's to come.
Thank you. Yeah, we can continue the conversation afterwards, and you can find our panelists, I'm sure, throughout the day here, me as well. But thanks for joining again, and thanks again to our panelists.